Welcome everybody to the weekly game plan. We have a lot to discuss this week. We're going to break down the broad markets, some trade ideas. We're going to get into Q&A, okay? So I'm Greg. I've been trading for 9 years. I am a chartered market technician. I'm a funded futures trader and a huge options nerd. So we're going to break down SPY. So let's get right into it. This is our S&P 500 ETF. And last week we had what's called an inside week. So we stayed within the range of the candle that was made on October 10th. And so that was the big sell side day, the tariff day. Over the weekend, it's actually not that big of a deal. Okay, let's whip around a little bit. Last week I did say the expected move is basically the range of Friday's candle. And I did say if you wanted to, you could take short positions if SPY got up to 670. And that exactly played out to a T. The SPY did drop. Friday was a weird day because I don't know if you guys saw, but in the futures market, the market was selling off hot and heavy on Friday. And at 2:30 a.m., they're like, oh boy, time to buy up the market. They really wanted to hold the lower edge of the expected move. And then Friday, I closed a lot of short positions Friday morning. And I'm glad I did because those would have gotten cooked. So moving forward on this week, we have what's called a Harami formation. So that means we have a wide ranging bar from that Friday candle. And then last week was an inside bar. All I can really say about the market, you guys, is that it's bearish beneath this level. It's bullish above this level. Anything in between is straight speculation. There could be, a breakdown. Odds kind of do favor a breakdown because the initial impulse wave was down and that kind of starts a new downtrend. But it is tricky because we're overall in an uptrend. So I'm just saying, hey, let's wait and see. I don't need to speculate too much on the broad market. I really need to just let it break, let it confirm, and then I can go bearish. I can buy put options. I can take inverse ETFs. I can go short on the futures if SPY breaks underneath that 652 level. Now, early in the week, if we start to come and test it, there's it's a 50-50 chance of whether it'll break. I could see a bounce the first time we test this level, but then if it comes and tests it again, it's like a hammer on glass. It weakens that glass every time that the hammer tests that glass, and eventually that glass shatters, okay? So last week, the expected move for the entire week on the market held. This week, the expected move is about $14. So that means SPY, if it breaks above all-time highs, it could test something like 680. If it breaks down, the next support is going to be the lower edge of the expected move, which is about 650. I'm also just going to cover some trade ideas and even event contract bets. I've actually been on a really good winning streak with my event contract bets on Kalshi. I've tripled my portfolio. I have been taking smaller size trades, nothing like I do in my stock account. But, my portfolio went from $100 to now $305. And I've got some new event contract bets that I think you guys may or may not be interested in. But I did put money on the line, and I want to tell you guys about it, okay? So S&P 500, let the market decide, okay? Other leading market indicators, IWM, a little bit of a false breakout over here. This is an evening star reversal. So IWM, I'd be neutral / bearish as long as it's holding underneath this high, IWM 252.77. I do have a wheel on TZA cooking right now, so I'm just going to cash flow that in the short term. If we take a look at VIX, Volatility and Fear Index, big breakout. I said, watch for a breakout over 1750. Boom, VIX explodes, goes up 30%. Then drops, then goes up again, drops, breaks out. Friday, big VIX move, but then a flat reversal. So VIX in the pre-market was damn near at 29, and it just consolidated, and then volatility subsided. It's tough for volatility to really hold at high prices. You can see volatility looks like a pump and dump. Volatility pumps, volatility dumps. Pump, dump, pump, dump, pump, dump, pump, dump, pump, dump, pump, dump. Okay? So we're in the dump phase of volatility. So I'd expect VIX to break out, though, if the S&P 500 breaks down. If not, that's totally fine. We've got setups all around town. Okay? So that's VIX, IWM. Let's check out semiconductors, another leading market indicator. This looks bullish. SMH longs are in play over 348, add over the all-time high, 348.50. So looking at like November, December bullish call spreads, if SMH is going to continue to break out, NVIDIA's just kind of holding up right now. It's just chilling. Could be a higher low pivot. Could also be a bear flag. Drop, bear flag. Do we get another drop? Or is this the higher low pivot and it just breaks out up? Okay. So that's kind of the setup on NVIDIA. AMD, nice and high up here. Keep an eye on this higher low trend for AMD. TSM, if you guys watched one of my videos, one of my favorite semiconductor stocks for the year was TSM. I was talking about TSM down here at like the 180, the 200 level. TSM got clapped during the tariff tensions, got as low as 134, and since then stock has more than doubled, going up 130%. Now TSM looks a little bit weak. It had its earnings report. It was a gap and crap. It could have been a breakout, but it didn't hold the prior breakout level. So whenever you break all-time highs and can't hold the all-time highs as support, look lower, okay? But I would like to buy TSM if it could maybe come down to like 266. I'd love it down at 247. So 247 is my dip buy for TSM. You can take a look at other ones like Intel. This is kind of like a high wave type of consolidation. You have a lot of upper wicks, but it is holding up at higher prices. I don't have a strong opinion on Intel. Qualcomm, little bit of relative weakness. I said Qualcomm could be a short at 164.57. It is lower from that price by about 1%, but I'd look for relative weakness on Qualcomm. Okay. What are some other ones? Micron. Micron's holding up strong. Got a small pullback from this level, broke out. Micron could be a little bit bearish underneath 194, but the real breakdown probably comes underneath 180 on MU. Okay, let's check out Bitcoin. Bitcoin, I said 104,000 is a dip buy on the Victory Talk podcast. Low of this candle is 103,798, and then it bounced 5%. So that was a short-term dip buy. Bitcoin, I wouldn't be surprised if it did like a chop downtrend. I could be totally wrong about that. Not much to really say. You made all-time highs and then you dump. Ethereum's a lot stronger than Bitcoin right now. ETH, Ethereum up 4.37%. Kind of broke this short-term downtrend line. Ethereum, I'd only really be interested in longs if it broke above 4,800. Okay, so set some price alerts there. I would like a dip buy on Ethereum. I'm not saying it's going to get down here. I'm just saying if it got down here, 28.41. That's this former breakout area. And there's a little bit of support underneath it at 26.28. Okay, and I like trading the ETFs. So ETH, super simple way to trade Ethereum. They got nice options on that as well. Otherwise, ETHU. I know we got some Victory Trades members that have been wheeling this for a while. That's just chilling for now. So let's get into some trade ideas, some event contract bets, some earnings, and then we'll get into your guys' questions, okay? So first up is going to be on PLTR, Palantir. Palantir has been consolidating in this range for a while. 171.66 is the low points, and the high points are 187.95. I like Palantir calls over all-time highs at 190 because, we've consolidated underneath this level. There could be a short on Palantir if it breaks underneath 170. So 170 and 190 are the ranges. I could see it going either way. Break down underneath 170, break out above 190. It may want to just wait and hold up until earnings on November 3rd, 2025. Okay? So Palantir bullish above 190, bearish beneath 170. Super simple. We talked about the SMH. If that wants to break out up over all-time highs, cool. I like it because it's at least consolidated. I don't like buying breakouts where it hasn't consolidated. Remember, stocks and ETFs, they can correct through price, through like a pullback. That can be your dip buy entry, risk off of the pivot, or they can correct through consolidation. That's correcting through time. They're digesting the current market prices, and then you can take breakout buys over the consolidation range. Being aware that every consolidation range can be a false breakout, okay? I'll show some examples of that later on, but SMH looks fine, looks bullish. Otherwise, if SMH breaks underneath that tariff candle, we'll call it, that would be bearish, you know? Correlations will sync up when stocks break down, okay? So when the VIX spikes, correlations sync up, and then the market is in play. But I don't see that as of right now. Another one is going to be AG silver. I would love to do like a put ratio on this, or straight up just sell like the 13 strike cash secured put. Expected move is $1.70. So, you know, maybe something like 12.30 could be a support zone. Maybe sell the 12.50 strike cash secured puts. But if I do a put ratio, I can buy a put and I sell 2 cash secured puts. Technically, it's a put debit spread plus a cash secured put. Super high win rate, super high probability of profit, 85 to 95% win rate on those put ratios, depending on the strikes that you select. So if you want a super high probability of profit, check out the put ratio. So I'd like to grab a dip on AG and silver. Speaking of which, gold gapping up yet again. Go watch that one video I posted about a month ago talking about gold longs. This is the next big trade right over here. Ever since then, it's really just gone parabolic. I could have leveraged up more and I could have held a lot longer. I took most of my profits about halfway through this range. So had I just held a lot of those trades, I'd be cooking. But I still do have some gold positions and silver positions. I'm actually going to be looking to take some profits on those and then look to reload on a dip. If it keeps running without me, so be it. That's fine. I'm cool with that. But AG wheel is in play. AG put ratio. Next up is uranium, URA. So uranium having a pullback on Friday, decent down day. I know that Brandon Serpa, one of our members, caught a nice win on SMR puts. The premiums were high, but they still paid out. But I like, it's one of those things where it's like, it looks like it's topping. I don't know if I totally want to go short, but if I am going to go short, it's going to be a short-term short. Got it? Short-term short on uranium, but longer-term buy. OKLO, I like maybe a put debit spread, a put underneath this 157 level. So set some price alerts. Target just a quick move down to 147. So if OKLO breaks underneath Friday's low, I'd expect like a 5 to 6% drop. I can risk off of Friday's high as well. It's not the best risk to reward, but a high probability short trade. And then if it gets oversold enough, I'd like dip buys. Okay, UEC, similar thing. We did a put ratio. That got a really nice gain. It was only a 3% gain, but 3% in a week. Not too shabby. 5 days, you know. But I like the put ratio on UEC again. So maybe do something like buy the 14 put, sell 2 of the 13.5 puts. That's a put debit spread and a cash secured put. You get a bonus if you get assigned. Bonus $50 bill. Okay, so that's another put ratio idea. Another one is DDOG, DDOG. This is a short trade, okay? Bearish engulfing on Thursday. Bearish candle. Harami formation. I like DDOG puts underneath 151.50, and I'll add to those puts underneath 149.20, and I'd target the 143 level. So Datadog, DDOG looking for about a 5% drop. And I can risk off of Friday's high, 156.50. Maybe a daily close above Friday's high. Okay, so set some price alerts. Super simple short trade. Okay. Speaking of short trades, I had a nice short trade on DocuSign, Doku, and I added to it, but I probably added at the wrong spot. I had this bear flag, drop, bear flag, went short near like the 69 level, got as low as 66.50, but then a bounce day on Friday. I might close DocuSign shorts. We'll see. The fair value of DocuSign is $90 per share, but it has been in a strong downtrend for a while. Okay. Another one is Roku puts. We got a good entry on Roku puts Friday near the 95.50 level, pretty much the high of the day. So yeah, high of day, 95.40. got short on Roku. The only thing is I had my option expiration through earnings, so I might need to pull that off into a further drop. But all else being equal, I think Roku goes lower over time. If the market is super bullish and super strong, Roku can gravitate upwards. But I'm just giving you guys some short ideas, some long ideas, and that's it. Speaking of which, NVIDIA, this ties in with SMH. NVIDIA looks bullish above 185, bearish underneath 177.50. Okay? A big reason for the VIX expanding on Friday was a potential credit crisis scare. Jamie Dimon was talking about cockroaches and stuff. When you see one cockroach, there's a squad ready. There's multiple cockroaches. But that was mostly in the regional banks. XLF is the base financial ETF for the S&P 500. So keep an eye on XLF to gauge market direction. XLF, if it's holding up, S&P 500 is likely going to hold up. If XLF breaks down, S&P 500 is likely going to break down. So set some price alerts on XLF. You can take a look at KRE as well. KRE, big down day Thursday, small recovery day Friday. Okay? So use the KRE as an indicator. I don't like trading it too much, but you could. If you do think there's going to be a big credit crisis event, give yourself some time, because generally they want to prop up the markets as long as they can before there's going to be a big drop. But maybe even something like April 17th. Oh man, the options, the bid-ask spreads are too wide to really take that. I don't like that. Ugly bid-ask spreads. I'm not paying 50% of the option premium to enter and exit. But just use KRE as an indicator for this week, okay? Another trade idea is going to be a PATH, cash secured put. So PATH, PATH, big breakout, now selling in. I like this if it could sell a little bit more, maybe a cash secured put, even expiring this week, maybe like the 14.5 strike cash secured put. Or I could do something like a put ratio. Buy the 15 put, sell 2 of the 14.5 puts. Cool. I like that. You get paid a bonus if you get assigned at 14.50. Okay? I would like the premiums to open up on PATH, PATH. Got it? Next up is going to be a long idea on J&J. J&J. Had earnings. Sold off a little bit, recovered. It was just a bit extended within this trend. This is a defensive stock, defensive sector. RSI is a little bit overbought. The option premiums are nice and low, though, and we do have kind of higher lows, flat top. I like J&J longs over 194, add over 194.40, and then start taking profits at the upper edge of the expected move. So J&J, if you're a savage, you could go with the weekly call option, buy the 195 call. Otherwise, I like something like the November 14th, do something like buy the 190 call, sell the 195 call. You know, I'm going to pay 2.88 in debit, but if J&J just closes at this price or higher, this trade profits, you turn $288 into $500. Okay? I can just size up on that if I want to. But I like J&J longs. Okay? J&J longs are in play. Remember that. Relative strength, defensive sector, all-time highs, I believe. All-time highs. All-time highs. Nothing bearish about all-time highs. Okay? Indicators look great. The only thing that could stop J&J is if the market breaks underneath the October 10th tariff low. Okay? That's really the only thing that could stop J&J. There can be other things that can stop it, but that's the main thing that can stop it. Okay? Another one is going to be NBIS. This is more of a longer term play, but I'd like this to get oversold a little bit. This is selling the shovels for AI data centers. And if this is the leader, I like dip buys kind of near this like 98 to 93 zone. Okay, so it's going to be like a demand zone. And longer term, I'd target something like the $200 level on NBIS. Okay? Stop on that trade would be like a daily or weekly close underneath 88. And then I'd just wait for a new setup. Okay? Another idea is Soundhound put ratio. So Soundhound finally having a down day on Friday. Wouldn't be surprised if it maybe sold a little bit more. After a bit of selling, I like the put ratio. I could do something like buy the 18 put, sell 2 of the 1750 strike puts. And again, I get paid a bonus if I get assigned at 1750. It does use $1,750 in buying power per put ratio. But again, it's that super high probability of profit. Okay, because even if you get assigned, boom, now I can just sell 1750 covered calls. Okay, I'll get a lot of premium for that. Okay, so that's Soundhound. Another trade idea is going to be TNK. TNK just broke out of this trend. I wouldn't mind a dip buy near 50.78. Options, not the most liquid, so I do like shares. Otherwise, an aggressive breakout trade is over 54.34. Stop 47. Nice hammer candle, and then 3 white soldiers bullish pattern. Green, green, green. Okay, so that odds favor higher rather than lower on TNK. Got it? Another wheel idea is going to be on DHT. DHT. Okay, just starting to break the downtrend. Momentum kind of just looks neutral, and it does have earnings on 10:30. But I could do something like long 100 shares, sell the 13 covered call. Or I could do something like sell the 12 strike cash secured put. That makes my break even 11.40. 11.40. That's a good break even. That's kind of like a retest of the trend line. I could use a stop of 10.83 on that. Okay. Another one is ATAI. Okay, this one accelerating uptrend in a nice channel. Could do something like long 100 shares, sell the 7.5 covered call, expiring November 21st. Okay, delta's 0.44. There's a 71% chance we touch 7.50. Okay, but longing 100 shares over Friday's high. Nice breakout on volume. Is this going to be a breakout or a topping move? Okay, big volume spikes generally happen at the beginning of trends or at the end of trends. Look at this volume spike right here. Much higher than the average volume. So R-vol, relative volume, much higher on this day. Breaks out, goes sideways for like 2 weeks. Breaks out again on an increase in volume and stair steps higher. Is this a topping move or is it just getting started? That's the $1 million question. Odds favor higher prices, okay? It is biopharma, so be careful. Size down on that if you're going to trade it. By the way, none of this is financial advice. You guys know the drill. None of this is financial advice. I'm just drawing on some charts. Charts come with limitations and difficulties. None of this is an offer to buy or sell any security. I'm just showing you guys what I'm doing, okay? And even the futures markets were starting out green, and now they're kind of flipping red, so we're still kind of in that whipsaw mode. Got it? Whipsaw mode for the market. So some nice wins last week. Congratulations, you guys. Some good moves. Look at this. XSP trades, RR wheels. Got some nice bearish trades on oil. Oil, I'm short-term bullish, but longer-term bearish. I'm bearish on the Russell, but I need to have the market actually confirm. Got some nice wins on UEC. Got some nice SPX trades, some futures wins. Here's the SMR put. Look at that. $391. Nice gain. Got some approved evals. I got some funded accounts. Got some butterflies over here. Look at this. $175 turns into $921. We're getting pretty good at predicting the SPX closing prices. Last week, I actually had like a flat week. I didn't really lose anything, but I also didn't really make anything. And that's just because the market just went back and forth. And I was kind of looking for a breakdown. And I didn't get it, so I just quickly went to cash. And that was a good move. I'm glad I did that for now. But SPX, symmetrical triangle, higher lows, lower highs. Which side's going to win? And even if one side does win, is it going to be a false breakout? Is it going to be a false breakdown? We live in some interesting times for sure. Got some nice futures loot. Prezzi's crushing it. Nice job. Freight and finance, always crushing SPX. And what's so nice about these butterflies and these trades is they have asymmetric risk to rewards. So even if you lose like $112. But if you win, boom, now you're making $486. So hitting a few butterflies pays for 10 of them, 5 of them, 10 of them. So good stuff. All right, let's get into your guys' questions, then we'll wrap it up. Okay? Oh, the Kalshi event contract bets. So if you guys are looking for some potential trades, I've been doing really well on Kalshi event contract betting. So one of them that I do these with much smaller size. But here's one. I actually wrangle these through AI. So I have AI estimate the probability of this occurring. And then I look at the betting markets. Does it agree or disagree? AI said that there's a 70% chance that Tesla mentions the word supercharger on their next earnings report. But guess what? The betting market only says that there's a 41% chance. So guess what? Because of that, the payout's much higher than your risk. So I'm risking $19.64. That turns into $46 if they mention supercharger or supercharger on their earnings transcript. Okay? So that's a trade that I took because the probability is higher and the risk to reward is great. Here's another one, Netflix. I actually added to this trade earlier, so I've got more money on the line. But what will Netflix say during their next earnings call? Ad supported. Okay, so Netflix has that ad supported subscription. AI says that there's a 97% chance that they're going to say ad supported on Netflix's earnings call. The betting market, though, only says that there's a 60% chance. So still more likely than not. Guess what? I put in $30. I actually added another 50 to this. But $30 turns into $49. That's still a good percent return. Okay? And if AI says 97% chance, it's more than likely not to. The payout's pretty good. It's like a credit spread trade, you know? Everything we do in life is just risk to reward. You don't want to like over gamble. You want to be smart about these trades. I'm not betting my entire portfolio on this, but it is just another trade. Okay, so take that if you guys want. You guys, if you want to, sign up for my Kalshi link. We both get $10. Do that if you want. Don't do that if you don't want. I just want to let you guys know what's up. Okay? What questions or stocks do you guys want broken down? Okay? I'm going to go down the list. So we're going to start with UUUU. India's been crushing the uranium trade. Nice job. So your average cost for UUUU is $18.74. Nice job. UUUU gapped down, then closed higher on Friday. It's going to mirror the uranium sector. If your average cost is $18.74, I guess my question for you is, what's your goals? What are your goals with the trade? Right? Do you want to get called away? Are you cool with getting called away? Or do you want to hold on to the trade? By the way, your premiums are really nice. What I would do is I'd look at, okay, what's some resistance? Well, there's resistance at 21.87. There's more resistance around 22.86. I'd look at selling the 23 covered call. Maybe even a little bit higher. I'd go with the 24 covered call. Sell the 24 covered call, not financial advice. If you're cool with selling your shares at 24, you're going to get $70 in premium. That's awesome. Yeah, 24 covered call. And what's nice about that is there's a 32% chance that you'll get called away. That means that there's a 68% chance that you won't get called away. And even if you do, you know, your average cost is $18.74. It's like you're selling it at $24.70. You know, that's a 32% gain in a week. Not too shabby. I'll take 32% gain in a week on equity, on shares. That's solid. Good stuff. Next question. Is RR wheel still in play? Yes, if you have a long enough time horizon. So RR finally selling a little bit, got a bit overheated. I was taking longs down here at the 2.80 level. Got called away at 3 like a bitch. I should have held on to that trade or averaged up or bought an in the money call. That's fine. That's fine. We actually had bullish confirmation on RR. So RSI made a higher high along with price. That means buy the next dip. Okay. It's very likely to hold. Okay. So good stuff. I say yes. RR wheel is still in play. This is a great candidate for the put ratio. You know, do something like buy the 550 put, sell 2 of the 5 strike cash secured puts. If you get assigned, you'll get a $50 bill plus a $25 bill for taking on that credit. So that means your break even is going to be something like $4.25. That's a good break even, $4.25 this week. Otherwise, give yourself some time, maybe October 31st. Do something like buy the 5 put, sell 2 of the 450 strike cash secured puts. Okay, you may only receive like $10 in credit up front, but if you get assigned at 450, you get a bonus. Okay, and then your break even's like $3.75 depending on your option fills. Okay, so utilize the put ratio if you want a super safe wheel. Okay, it's not going to pay very much, if not anything, if it just goes straight up, but that's fine. It just parks your cash, puts it on hold. You get a small percent return. Still better than government bonds to park your cash. And then you get paid that bonus if you get assigned. Any other stocks? Now's the time. Bring up your guys' stocks. Tesla earnings, October 22nd. Tesla looks more bullish than bearish, although earnings could tank it. I like a dip buy on Tesla at 365. Otherwise, you kind of have to day trade it. Yep. So going over TZA, I am wheeling TZA. I'm going to probably sell the 850 covered call this week. My reading on IWM is neutral / bearish, all else being equal, because we have an evening star reversal. Evening star reversal means big green candle, doji candle or indecisive candle, big red candle. That is the evening star reversal. It triggered short on Friday. So really I should have added to my IWM bearish trades Friday. Actually did. I've got some rut spreads cooking. If you want to see what I got, check out these spreads. They're actually down by $65. That's basically break even for what I'm looking at. But I got October 22nd. I think rut closes underneath 24.45. I'll close that trade if we start to break above Friday's high. Take a tiny little L on that and then move on. Otherwise, I get max profit of $280. I got a good fill on this. So I'm risking $220 to make $280. So this is what my risk profile looks like. Minus 220, anything and above, plus 280. This price, anything and below. I like that. It's a pretty good risk to reward. But in the meantime, I'm also cash flowing it with TZA. TZA, I'm probably going to stop out if it closes a day underneath 7.14. My average cost is around 8, so I'm sitting at break even on TZA. Some other rut trades. I've got some layered bearish expirations, and I am long on some other stocks as well. Target, I'm long on. But 24.50 bearish call credit spread, October 30th. If you're going to take bearish trades, try to go with the October 30th expiration, maybe October 29th expiration. Got a cheap little put debit spread. So this one, what's this trading at? $65. That's my total risk. $65 turns into $500 if the rut sells underneath 23.30. So where's that on the chart? 23.30. Not super far down. That's a decent move down. 23.30. I don't have to hold this to expiration, but I can just close this if we make a leg lower. So that's if this move breaks bearish, turns $65 into 500. That's pretty cool to me, because even if I lose, whatever, $65, I'll sneeze that on an SPX trade. Sneeze it. Okay. Yeah, if you have 150 shares of TZA, Alan, I would what you can do is set a buy stop order for 50 shares above 8.18. If it triggers in, now you've got 200 shares, and then you can go out and you can layer your covered calls. So maybe October 31st, sell the 9 covered call on TZA. If the market does break down, I'm not like looking for like a super big bearish move. I know people talk about like crashes and stuff. I'm like, whoa, 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 whoa. Let's just talk about small pullbacks first before we talk about crashes. I think the worst the S&P gets this year, if it does drop, is 600. SPY 598. And again, that won't even break down if the market just continues to hold up. Futures markets are flat, so they're indecisive. We could totally chop this entire week and really tighten up and then break out or break down into the end of the month. I could totally see us getting towards the apex of this pennant right here. And, you know, maybe you have a red Monday, green Tuesday, red Wednesday, green Thursday. Which way we gonna break? So it's really a waiting game. Size down. Look for opportunities in other markets. Even gold is starting to cool off just a little bit. Looks a bit top heavy. We do have a big volume spike from Friday's candle. Remember, volume spikes signal the end of a trend or the start of a new trend. Gold has been on a trend, and then we got a volume spike on a down day. I wouldn't be surprised if it dropped. I would only day trade short gold. I wouldn't even highly entertain it. But I would love a dip buy if it could drop. The ideal spot is the former breakout area, 3550. Probably not going to get that, but even something like 3,900 or 4,000 could be a little demand zone. But yeah, that's up with gold on the daily and the weekly. Waiting for a pullback. Wouldn't be surprised if it's topping out. It's in a strong uptrend, so I wouldn't be surprised if it just resumed the uptrend after a tiny little dip. Kind of like the S&P 500. Has a tiny little dip, goes back within its uptrend. This could look like the gold chart moving forward. But yeah, Netflix earnings, we got that Kalshi bet. When I say we, I just mean me. I don't know how many of you guys are taking that. No strong opinion on Netflix earnings, whether it breaks up or down. And yeah, I think I've covered pretty much everything. Have a fantastic rest of your weekend. Let's be ready for futures trading tomorrow morning. Some good tips that I have for futures trading. Stop focusing on the money if you are. I'm not assuming that you are, but people tend to focus just on the money. Focus on trading well. Just focus on executing your setups as best you can. Like completely dissociate from the results. Focus on the inputs. Good setups. Stop out fast, stop out early. Stick to your stops. Ride your winners as best you can. Have a system for riding your winners. Am I going to trail this on the 1 minute if I'm scalping? 5 minute, 15 minute. I've been noticing when you can identify that one side is trapped, whether it be bears or bulls, there's many opportunities for that this week where you can trail stop. And I'm only expecting to make like $200 on a futures trade, and I'm trailing out for 1,000, 1,200, 1,500. I'm like, okay, you're just going to give it to me? Cool. I won't say no. So like, just to like even note on the intraday charts of NASDAQ, you know, right over here, Thursday, I was expecting more of a chop day Thursday, and we got a chop day. And then as soon as the live ended, we broke the high of the day. Cool. Then we dropped, bear flag, dropped, bigger bear flag, bigger drop. I made a crap ton of money shorting this, setting the stop loss here, trail the stop loss, trail the stop loss. And then this green candle took me out. It was absolutely amazing. I made about $1,200 on the funded account. I'm trading MNQ on that. And so just trail stop. Because so oftentimes you will probably just get tagged out for a tiny loss or a tiny win. But risk adjusted, your R multiple is exponentially higher if you can move with the waves. Okay? And even this is some tricky buy setups, you know, sweeping the lows, then moves higher. At this point in time on Thursday, the market could have recovered. Actually, I had a green day futures trading, but actually I had a red day trading SPX because I thought that it could close within this range. And again, that's because I established the iron condor at the beginning part of the day. And at this point in time, we have an option. Do we go back inside the range? 2/3 of the time we will. 1/3 of the time they wanted to sell it off and retest the lows. So just a bunch of bullshit this week, if you ask me. I don't care which way you go. Just pick a dang direction. But that's what happens when volatility subsides. I could have done a better job of maybe swing trading iron condors. I'm not the biggest fan of that, but that was kind of the setup. So this week, drop, bear flag, drop, or drop, bear flag, recovery. That's the main thing I want to leave you guys with, okay? Yeah, market maker, I did break down the RR wheel. It looks okay. Have a longer term time horizon with that. I might enter a trade though if it sells off Monday. Maybe I'll sell some 4-strike cash secured puts or 350. What are some good leaps for the nuclear sector? UEC. It's tough to value some of these because it depends on how well nuclear gets adopted. But January 2028, do something like buy the 10 call, sell the 20 call. I like leap spreads, but that's just me. Buy the 10 call, sell the 20 call. It's a risk of $300 to turn into 1,000. 300 risk to turn into 1,000. Otherwise, I do like wheeling these, especially if they pay a dividend. UEC does not pay a dividend, though. No dividend on UEC. UUU. No dividends on UUU. But URA pays a dividend, so maybe shares on URA get the ETF exposure. See, here's the thing, though. URA did kind of hit my yearly target of 55. We talked about this breakout over 34. It hit that price target of 55. Could hit 70, 85, and probably even get to all-time highs by 2028. That's if uranium gets adopted well. Maybe go out to something like January 2028 and just keep it simple. Simple as in advanced. Buy the 60 call, sell the 80 call, risk of $455 to turn into $2,000. There you go. $455 is your risk. Turn that into $2,000. Just wait a few years. Just sit on it. Okay? So that's a simple leap option trade. It's an ETF. It can get brought up with the broad market as it trends higher over time. And if it has outperformance, alpha, compared to the S&P 500, you'll hit that trade. Odds favor that you actually don't based off the option chain that says actually, never mind. It says the delta on the 60 call is 0.57. That means that there's a 57% chance you're going to get in the money by January 21st of 2028. I like this trade. I like that trade. I'll post that in the VT investing channel. Okay? Victory Trades investing channel. All right, that concludes tonight's session. Good session. We've got trade ideas, trade setups, event contract setups. Yeah, I like it too, Brandon. I'm excited for the upcoming week. We got long-term trades, short-term trades, day trades, swing trades. Looking to make some good money this week by executing well. If I leave you guys with anything, just focus on the execution. Grade yourself on the day on whether you executed well, not whether you were green or red. Okay? You can check back on the numbers at the end of the year. You know, a doctor doesn't count his dollar bills while he's, working with a patient, right? That would be so savage. So you shouldn't do that with trading. Don't count your money until the day is done. And then even then, grade yourself on how well you executed your plan. And from there, it compounds. Have a great week, you guys. I wish you all wonderful profits. I'll see you guys tomorrow morning if you're in Victory Trades. If you're not in Victory Trades, I'd love for you guys to join me. Come check out the first or second link in the description. If not, I'll see you guys next time. Peace out.